Saturday morning to you, and welcome to On the Mark alongside Mark Papa. I'm Gary Byron. Mark is the president and CEO of Financial Resources Group. They're right here in Glastonbury, Connecticut. In fact, you can find them online at www.frplan.com. F as in financial, R as in resources, plan, frplan.com. And at the end of the show, you're going to want to be paying attention. I'm going to give you the phone number right now. Write it down and have it handy, because you're going to want to call it. And I'm going to let Mark explain it. He can do it much better than I. But let's just put it this way. What you're going to get is complimentary, and it's got a $2,500 value. You heard correct. In fact, that may even be a conservative number. Here, write this number down. 860-657-8380. One more time. You ready? 860-657-8380. And if you miss all those points of contact, no worries. I'll give it to you at least a couple of more times before this show is over. Mark, good morning. Great to see you.
Good morning, Gary. How are you?
Oh, hey, are you kidding me? I am peachy. How was your concert last week? Was that
my God,
Billy Idol?
It was a blast. It was nothing short of a blast. And what a professional. And the guy's like, I don't know what to say, but he's still awesome.
Well, listen, the guy was around. The guy's been 45 years at least.
Well, a little scary. Yeah, I remember coming home from school, turning on MTV, and he'd been wearing that outfit. You know? Yeah, that's right. And but still has it, which is great.
Yeah.
You know, it's just a different time in time for all of us.
And Steve Stevens, right, on lead guitar. That guy can rock. He wails, man.
Yeah,
what do you got? Anything going on this week? Anything fun and exciting? I mean, we're still in the dog days of summer here.
Yeah, no, I haven't really done much planning for this weekend, and after last weekend, maybe I need to take a little break, if I'm being honest.
Recouping, that might not be a bad idea.
Well, yeah, I mean, no matter what, I'm going to go and do my gym, and then probably find something to do with my son, maybe hit the beach, take my little Mustang convertible out, have a little fun. That's never a bad time.
Never. No, that's fun stuff, man. Today's topic is one, and I'm going to be honest with you here, folks. I'm going to be upfront. It's rather morbid. It's something nobody really wants to bring up at the Thanksgiving Day table. And I'm being very serious. I'm not exaggerating this. But it's a necessary discussion. It's awkward, it's uncomfortable, but yet it's very necessary. We are talking about how your funeral gets paid for. Mark, it is an awkward conversation. Let's start, Mark, with the number, because I don't think most people know it. What does a funeral cost today?
Yeah, and it really varies, and there's a lot of interesting things happening in that business, so I'd happy to get into it, Gary. And you're right to call it morbid. It's like the Grim Reaper meets the Undertaker, but
uncomfortable, too.
I'll add one word to it, morbid and necessary, because
yes.
This is a bill that arrives for every single family without exception, usually at the worst possible moment. And it has to be paid for before anyone even has time to think about it. And then it's just one of those things. If it hadn't been pre-planned, everyone thinks they've left money behind. People figure they have a joint account that they threw some money in to help pay for it. They may have cash there. We also, by the way, as part of the full checklist review in our Survivor's Guide.
We'll do that towards the end of the show.
Yeah, but I'm going to talk about we make sure that the client lists in their Survivor's Guide how they want their funeral to go.
Oh, right.
Hugely important. Because what happens and I have somebody who I know personally went to the home, and by the time they were done with the bill, they couldn't believe what they saw. They didn't realize that the casket was X price. It was like $12,000 for the casket because the mom wanted a certain kind of casket. It was crazy what they ended up having to spend, and then the fees and everything else just kept recurring. And they're like, when does this end? And where are we going to get the money to pay for all this stuff? And it's a long story short. In addition, we also have the client write down their obituary. We have the client also list the people they want to invite or people that they may not want to forget because they may be friends or fraternal organizations or people that your kids don't know how to contact. So we really do a lot of advanced planning, not just paying for it, but we do a lot in preparation for our clients. so that this way, at that question, now not at that meeting, but when it comes time for our solutions meeting, we can bring this up. So we're going to get into it, Gary. We're going to really get into it because this is a lot more helpful, and there's a lot of misconceptions about this that, hey, back in the day, I'm just going to walk into the funeral home, go to the family funeral home. We've been going for years. We're going to knock on the door, and we're all going to go get it done. Unfortunately, that family funeral home is no longer a family funeral home anymore. It's owned by big conglomerates, so we're going to get into it.
Did you want to do a disclaimer now, or did you want to do it later?
Yeah, because this is an insurance product, Gary, why don't I get into it? Because I need to separate this from our registered investment advisor. We've heard that disclaimer a million times. But insurance products are offered through appropriately licensed agents, which I am, licensed in the state that I would be offering that product, are separate from advisory services offered by Financial Resources Group, LLC. Guarantees of these policies are backed by the claims-paying ability of the issuing insurance company. Medicaid rules also vary by state, and eligibility is not guaranteed. So listeners should consult a licensed elder law attorney or a licensed agent with experience in these products regarding their own situation, for sure.
Okay. All right, I'm going to go back to my original question here. Let's start with the number. I'm curious to know, what does a funeral cost today?
Yeah, and it's more than people expect, Gary. So I wasn't trying to dance around the question. I just wanted to defer it for a minute. The gap between what people expect to pay when it actually costs is where families get hurt. According to the National Funeral Directors Association, which we'll refer to as NFDA, National Funeral Directors Association, price survey, the services and merchandise for a traditional burial run just under $10,000. Yeah. And that's what I would call, that's before what I'd call more of the real world additions. You might want flowers, you have the obituary, a headstone if you're getting buried, opening and closing the grave, the burial plot itself, and those things. And they're, and those are roughly, when you add all those up, actually roughly about 15,000 or more.
What about a cremation? Is that any cheaper?
Well, more and more people are opting out for cremation, Gary, and we also, again, if you want to be cremated, make sure you tell your kids you want to be cremated. We've had a situation with one of my colleagues where this woman came into his office bawling her eyes out, and about 3 weeks after the funeral, found in mom's important papers, and it said, so it said basically that she was a devout Christian and she wanted a Christian burial. But guess because the mom was very thrifty, tight with a buck, didn't want any services, was very, very, grew up in the Depression, guess what they decided to do? Versus the casket. They went with cremation. Yeah. So now she felt good felt that she helped her mom out or violated her mom's wishes.
Oh, it's not what mom wanted. Right?
Yeah, not what she wanted, but she didn't even know because she didn't have a survivor's guide. And she didn't know where to find the important papers because her mom kind of died suddenly. Mm-hmm. So that's kind of one of those things that I wanted to bring up as well, why it's so important to get this stuff planned ahead in advance. It doesn't have to be complicated, by the way. We simplify and streamline the process.
All right. And when is this all paid?
Well, basically, you have to pay it then and there. The funeral service director, you have a burial of about, on average, of $9,995. This is 2023 numbers, by the way. That's when the last survey was done, so that could have gone up. Additional fees and costs could be, on average, $6,380. So about $15,000, call it $16,000 and change. With cremation, obviously, that's a lot cheaper. That's about $7,370, so $7,370. And again, this is NFDA, National Funeral Directors Association, survey done in 2023. Yeah, wow. So when it's paid and when, and this is the part that catches up with families, Gary, most funeral homes require payment before they'll provide the service, not after. So before.
Somebody they just put on a credit card or?
Yeah, exactly. So you have a grieving family, often within 24 to 48 hours of death, being asked for $10,000 or $15,000. And a traditional life insurance policy, by the way, a lot of people say, oh, that'll pay for my burial. Great. Well, that requires you call the company, have them mail the paperwork, fill out the paperwork, hopefully fill it out correctly, send in a death claim with a death certificate, and that could take up to 30 days or more to pay. The money exists. It just isn't there yet. Is that a lot of time, cost, and hassle to deal with?
Oh, my goodness. All right. Now, the standard advice. And I've given it myself on my morning show. is what? Go down to the funeral home and prepay, lock in your arrangement. But you're telling me, if I understand this correctly, that also has a problem also, doesn't it?
Yeah, and I want to be careful because, Connecticut, the Hartford area, there's some really highly reputable funeral homes and that people go to. It's the same ones, and they're in good shape. Very nice, wonderful people. We've all had to go to funerals or wakes at them, and they've been around for decades. But it has two problems though. In doing this, and again, I'm not here to shame anybody, but this is what's been going on nationally, and we've heard instances of these problems coming up. So it has two problems, and they're different in kind. The first is simply that most people never do it. So that's problem one. They don't plan. They think, well, I'll just get money out of the checking account, the joint account that my daughter's on, or whatever. Or attorneys and financial planners have been giving that advice for decades, by the way, and the follow-through rate is very, very poor. People mean to, they just don't get around to it.
I could see that. All right, what's the second problem?
Well, the second problem is the one that ought to make people sit up a little bit. When you prepay a funeral home directly, you've handed your money to a business. And businesses can fail from time to time, or they can get bought out by bigger companies, and the bigger company fails. Right? The industry has gone through heavy consolidation, private equity investors, people trying to consolidate and roll up family funeral homes. The small family funeral homes bought up by larger and regional national operators. And when one of those operators has run into trouble, consumers who prepaid have run into cases where they've actually lost money or found their contracts weren't honored the way they expected.
Oh, my goodness.
Can you imagine, on top of losing your loved one and planning the funeral, all of a sudden you find out that you got bamboozled because the funeral company, they're not going to honor your contract? And imagine having to fight that while you're trying to fight your grieving and, you're sobbing and, trying to take care of your family. And can you imagine having to deal with that?
No, Mark, how does this even happen? Because you paid the money.
Well, the most notorious example in this country involved a large pre-need funeral trust operator whose collapse left tens of thousands of families holding contracts that were not fully funded. And it took years of litigation and state guarantee fund payouts to sort that out.
Yeah.
And Connecticut does. I'm going to talk about what Connecticut does have a guaranteed fund, by the way.
Yeah. Like I said, you paid the money. What this shouldn't even happen.
You paid the money to an entity that was then supposed to hold it in a trust or in an insurance policy until needed. Now, the protections depend on state law and how faithfully that money was actually set aside, and on the financial condition of the operator. Connecticut has its own pre-need rules and protections, and I want to be clear. And they are meaningful, by the way. Connecticut requires 100% of prepaid pre-need funeral funds to be deposited into an independent escrow account or a trust within 15 days, managed by an escrow agent who cannot be the funeral director. Under what's called PA Public Act 26.57, the state established a funeral service guarantee fund providing up to $10,000 in restitution for fraud. However, how long is it going to take for that claim to get processed, Gary?
Yeah, well, you know what I'm thinking about.
And I'm not saying it's a bad thing, but
no.
You want to pay it right away, or wait 6 months before you go through the.
Listen, so many people I know, as they, especially at this age, they move to Florida. They retire down there. So what happens then?
Well, then you may be trying to collect on a contract within a funeral home 4 states away, and that's a real practical problem. And it's not the other, it's not the other half of why. I want people to at least know there's a different structures available.
Which is?
Well, don't give the money directly to the funeral home. Put it inside a life insurance policy, and then you assign that policy to an irrevocable trust. So let me repeat that. You put it inside a life policy and then assign that policy to an irrevocable trust, which is obligated to pay the funeral bill. Now, whichever funeral home you end up using, it doesn't matter. The money is held in an insurance company, not the funeral business, and it's portable.
Okay. All right, so walk me through the mechanics here, plainly.
Well, let's see. Plainly, the way there's basically 4 steps. 1, you take the money you already have, right? Okay. Well, let me just say, let me give people a first before we go there, okay? Because I want to just talk about what most people try and do. And basically, there's the one, you can take the money you already have, a savings, a CD, and sometimes an old annuity or an old policy. And that's, whatever, it's called a 1035 exchange. But you can also use it to buy a single premium whole life policy. And a single premium means you pay once and there's no monthly bill for it. And then you have step 2. you irrevocably sign the policy to a trust, and the trust becomes the owner of the beneficiary. 3, the death benefit sits there and grows modestly. It's not a growth product, so and we'll come to that. And until needed. 4, at the time of death, the trust pays the funeral provider directly, typically within 2 business days, and generally without waiting on a certified death certificates in most states.
2 days versus what, 30?
Well, it could be up to 30. That's if you get your paperwork done correctly. And that's if you depending on who has to sign that death claim, or you may have somebody, another one who's a beneficiary that's traveling a lot and they don't get their paperwork in. It all depends on how you have it structured. But the whole point of it is structure, and the funeral home gets paid often before the service has even taken place. So no one in the family has to front the money. No one has to whip out their credit card or have that uncomfortable conversation.
So, but what's the product actually called?
Well, I'm not going to tell you. I'll give you an idea. It's called Asset Guard, but I'm not going to tell you who the issuer is. And here's the thing that confuses people. So let me say it clearly. It is one product, and there's many other companies that offer this. This is just one of my favorites. It's one product, the same policy. What changes is which is the trust that you attach it to. So there are 2 trust options that you will be choosing between them, and it is really the entire conversation, the 2 different trusts that you can choose from.
Before we get to the 2 trusts, what does it pay?
Well, I want to be careful and honest here, as always, because this is where people misunderstand these products. This is not an investment.
Right.
We're not here to make money. It's
Yep.
not SpaceX like last thing, and it's not a CD either. The growth rate is only 1%. However, you're not using this to get rich, and anyone who pitches it that way as a return-generating asset is pitching it the wrong way. Probably not something you should work with. The purpose is protection and immediacy, not growth. Protection and immediacy. And what you're buying is certainly that a specific bill gets paid quickly without disturbing anything else. But what you're buying is peace of mind and convenience for your family.
All right. So roughly put in what, like $10,000?
Yes, you have roughly $10,000 of immediate death benefit that grows slowly from there. Guaranteed issue, meaning no health questions, no medical exam, and the full death benefit is available immediately. And there's no 2-year waiting period for some, like final expense policies. Issue ages run from literally 0 to 99. So sometimes what happens is there's a 2-year waiting period as well. You don't want to deal with that when it comes to an insurance policy for your funeral.
Folks, you are listening to On the Mark, along with Mark Papa. I'm Gary Byron. Mark is the president and CEO of Financial Resources Group in Glastonbury. You can find them online at www.frplan.com. And here's that number. If you didn't write it down earlier, you're going to want to, because in less than 10 minutes, you're going to be calling it. So you can obtain, something that's a value of $2,500. Here, write this number down right now. 860-657-8380. I'm going to give you the lowdown in less than 10 minutes about why you should be calling that number right at the end of this show. All right. 2 trusts. Lay them out for me, please.
Yes, and I just, if you've been listening for this long, please stay on the rest of the show, because this is where the exciting part comes.
Yeah.
This is where it actually becomes very, very meaningful. There's 2 different types of trusts involved here. One is the estate planning trust, and people in the business call it EPT, or estate planning trust. The other is a funeral expense trust, or FET. And same underlying policy, by the way, but a different job and different structure. So let me go over those 2 structures, Gary.
Yeah.
All right, your estate planning trust, it transfers wealth to cover final expenses. The face amount can be anywhere between $2,500 and $100,000 because it's more of an estate planning tool. Your excess funds will go to a named beneficiary or beneficiaries. It's not designed for Medicaid planning, and it may be exempt after the 60-month look back. You have a 5-year look back on Medicaid, if God forbid you ever had to qualify. Funerals paid within 2 days. There's no fee for them to make the trust for you. Find me a place that's going to make a trust for you for nothing.
Yeah, right.
Okay?
Exactly.
And it's also not available in New York in case we're reaching over the border. Sorry to hear that. Don't call me if you're from New York, but you can, if you have a relative in Connecticut or Massachusetts or Rhode Island, where our reach goes, then you have them call me. Now, you also have the funeral expense trust.
FET.
Yeah, FET. And this is designed to protect assets, and it may help you qualify for Medicaid. You can actually put $2,500 to $15,000 in this one. The excess funds go to the estate of the insured. It may be an exempt asset now and subject to state face amount limits for Medicaid. It's typically paid within 2 business days. There's no fee, and it's also not available Florida, Mass. So don't call us if you're from Mass for that one. Michigan, North Dakota, we're not going to reach that far. So wish we did, but
on the app,
we don't.
They can get us on the app.
Yeah, they can get us on the app. So.
All
anyway.
right, so the headline differences are what? The size and really where the leftover money goes. So I have that correct?
Yeah, and there are 2 that matter most to the family. On size, the funeral expense trust caps at $15,000 because it's designed to cover the funeral and not much more. Okay. The estate planning trust goes to $100,000, so that gets a little bit larger. It's just another place to park money.
Okay, and what the leftover money? Say the funeral costs, I don't know, $12,000, and there's $20,000 in there. What happens to the rest?
Then you have $8,000 of excess, and that's where the 2 trusts diverge sharply. Under the estate planning trust, the excess goes to the beneficiaries you named directly and quickly outside of probate. Under the funeral expense trust, we love avoiding probate.
Oh, yeah.
And under the funeral expense trust, the excess goes to the estate of the insured, which means it may go through probate, or if the person received Medicaid, it may be subject to the state estate recovery rules.
Meaning that the state can claim it, right?
Right.
Yeah.
And then the other side of it is it doesn't have to go to the estate. I'm pretty sure if they have a revocable trust, and I'll double check on this, a revocable trust of some kind, it can go to a revocable trust as well. But, that's just...
All right. So, Mark, you're sitting with someone. Which one do you start with?
Well, I mean, that all depends. I mean, the state may be entitled, and going back to the Medicaid, the state may be entitled to repay out of it. That's not a scandal in any way. It's just how Medicaid recovery is designed to work. But a family that doesn't understand the difference can be genuinely surprised. So why don't we start with this, where it fits? I start with the estate planning trust, and it fits when 3 things are true. First, the person has enough of other assets and they can comfortably get past the 5-year Medicaid look back. Okay, which is important. Second, they're in reasonably good health. And third, there's no strong family history of conditions that lead to long nursing home stays, dementia, major stroke, and that type of category.
And if those 3 things aren't true, then what?
Well, then you take a hard look at the funeral expense trust instead. And there's no shame in that. It's the right tool for the situation. But when those 3 things are true, there are 3 concrete reasons to use the estate planning trust first. Okay, so when we go over those. So number 1, it keeps the other a card in the deck, meaning the funeral expense trust can still be written later, even if someone is already giving nursing home care or already in spend down. And it's an assignment form that has a section allowing the client to waive the 45-day free look period and assign funds to the irrevocable trust immediately, which moves those assets out of the estate right away and helps the Medicaid qualification. So if you use the estate planning trust now, you still have the funeral expense trust available if circumstances change. So start with the funeral expense trust, and then you've used your flexibility early. If you start with it first, you've used your flexibility. So it's portable. You can actually move it into the other one to qualify for Medicaid. Okay, if God forbid that's what happens to you. So the excess money goes to people, not probate. The estate planning trust. Excess also goes to the named beneficiaries, and the funeral expense trust excess goes to the estate of the insured. So for most families, that difference is the difference between a check arriving in days and money working its way through probate, which takes quite a long time, and potentially through Medicaid estate recovery. 3, it holds far more, $100,000 versus $15,000. So because these policies pay out quickly, the larger amount gives the family real flexibility in the first 2 weeks. Relatives flying in, hotel bills, immediate expenses. You may have a family member that can't afford to, fly out, so you take care of them. Those kind of things.
Yeah, that third one there, that strikes me. It's not just for the funeral. I want to give you room here. Because I'm running out of time.
Yeah.
Because you had said right before we went to air that this is the part you don't want anyone to miss, right?
Yeah, it is the most important thing, and I'll say today, Gary, is. I'd rather talk to somebody out of this. Well, let me put it this way. I'd rather talk somebody out of this than have them do it without understanding it, okay? So the word is irrevocable. So when you assign a policy to a trust, that transfer is permanent. It can't be changed.
What does that mean here?
Well, you don't want it to be changed. It means that after the free look period ends, You cannot surrender the policy for cash. You cannot borrow against it. You cannot get your premium refunded. It's purposely there for the funeral or estate planning purpose. You can't change the ownership. You can't change the beneficiary. It's irrevocable. That's what that means. You also give up control. So with one narrow exception under the estate planning trust, if the trust beneficiary dies before you do, you cannot change the face amount of the plan. So just basic stuff.
That money is gone from your control.
Yes.
Okay.
And you want it to go on from your control because you want it to do things like pay for your funeral or avoid probate. So, that's your whole entire concept. And then also you want to make sure that the asset, if it's going to be put towards your funeral, remains exempt from Medicaid.
That's a strong caution for something that you're recommending here, my friend.
Well, you have to talk about the pros and the cons. And, I'd say for most people, popping $10,000 into one of these policies is fine. 10 to 15,000, you can put up to 100,000, or if you wanted to do $5,000 to $15,000 for these funeral trusts because you're in a nursing home or you're going to in Medicaid spend down, it's a great way to get rid of the money.
People are getting ready to call.
I hope so.
Tell us what they're going to get? It's a value of over $2,500.
Yes, and aside from the funeral planning trust, I think during the process when we do our survivor's guide, which is the very first thing, we can determine right then and there what your needs are going to be for a plan like this. If you don't have anything in place, and we can talk about that. And that would be a great thing. Talk about your obituary. I mean, I know it's boring. I know you want to talk about money and buying SpaceX or buying stocks that are going to make you rich. But the reality is this is the kind of deep level planning that we do for people. And I wanted to bring this up because I haven't heard a radio show on it yet. It's something that we're talking about with all our clients. We're putting out a note to everybody. And I think the biggest thing I'm concerned about is the consolidation in the industry and how people aren't getting the funerals that they paid for.
All right. Financial Resources Group out of Glastonbury, Connecticut. You'll find them online at www.frplan.com. And right now is when you should be picking up the phone and dialing a $2,500 value. Call Mark right now, 860-657-8380. It's going to be yours, complimentary. Here's that number one more time, 860-657-8380. For Mark Papa, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.